I had the teenagers with me this weekend, and they were so enthusiastic about the Tesla, and they're not enthusiastic about anything.
Mark Delaney is another bull, and he's from Goldman Sachs, and he picked Tesla as a top pick for 2022 with a price target of $1,200, increasing his price target to $1,200 on Tesla.
Tesla's going to get half of that, $2.5 trillion, and raise the price target on Tesla to $1,400 in a bull case scenario, $1,800.
Spoiler alert, before the end of this month, January 2020, Morgan Stanley will increase their Tesla price target. Just you wait. Well, didn't have to wait long. Less than a week later, and Morgan Stanley have increased their Tesla stock price target to $1,300 per share. In this video, Tesla stock remains super volatile, swinging 8% today. A finance anchor admits her kids are obsessed with Tesla, and as predicted, a number of analysts have increased their price targets on Tesla stock in the lead up to their Q4 earnings, and there'll be more to come. You can count on it. So let's get into the video. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. So there's rarely a dull moment when it comes to Tesla stock, closing up over 3% today. But look what happened. The stock opened under $1,000 per share, the low for the day $980, and then rocketing up during trading hours, continuing in after hours, moving more than 8% during the day. That's about $80 per share. Let me know in the comments below if you managed to pick up any Tesla stock on sale. Next, Morgan Stanley have increased their Tesla stock price target to $1,300 per share, a truly shocking event that no one could possibly have foreseen coming. Let's read the note. Raising forecasts on 4Q unit beat, price target increasing to $1,300 per share. And before we read this, I just want to point something out again. These clowns have no idea what the fuck they're talking about. Their EPS estimates for Tesla are embarrassing. I mean, embarrassing. The kind of stuff that I would resign in disgrace over when I turn out to be that wrong. So stay tuned. These will also increase in the near future, unless these guys are dumber than I think. And let's be honest, they're actually relatively smart despite the fact that this EPS suggests otherwise. 2022, this is at least $12, $13 plus dollars, maybe as high as $18. Could be double where they're at. Will be at least 50% above where they're at. Minimum. Tesla 4Q deliveries were 20% above our forecast, annualizing to over 1.2 million units, which is already above our prior 2022 forecast. What a surprise. Morgan Stanley underestimating Tesla. Does anyone recall me roasting these guys in multiple videos over the last few months, pointing out that the delivery estimates were way off the mark, massively underestimating? We raise our forecast and target to $1,300 per share on this opening act and look for more in 2022. The message to investors on Tesla is as straightforward as it is easy to ignore. We believe there are signs that the industry leader is accelerating its lead over its EV peers. What a shock. Where have we heard that before? It's accelerating lead, unassailable. I almost feel like I've heard that said somewhere before 1,000 times. Don't know where though, maybe I'm imagining it. Which should not be construed as a positive for the broader sector. A marathon and a jetpack. Think of the EV race as a marathon. Now, I've got to stop here again. You see, I'm getting some deja vu here, like some major deja vu, race, falling over, starting, it's sounding familiar. Let's continue. Tesla is in the lead at mile number 21. Everybody else is at mile 2 or still tying their shoes. God damn, this sounds familiar. We struggle with the logic of giving the leader a jetpack to strap on for the rest of the race. How is this positive for everyone else? I'm assuming they're talking about the EV tax credit here. Build back better. Morgan Stanley referencing a couple of recent reports. I covered both of these on the channel. Search in the recent videos, you'll find them. What's changed with our model? Volume. We raised our 2022 delivery forecast to 1.46 million. Fuck me. Please, if anyone from Morgan Stanley is watching, you're probably not, otherwise you'd be better informed. But if anyone is watching or anyone knows anyone that works at Morgan Stanley who's analyzing Tesla stock, grow some fucking balls, use your brains, do the numbers, and you'll realize that Tesla's at least 1.55, 1.6 million units in the worst case scenario. Worst case scenario. That's conservative. I know you're pussies, so you don't want to go out on a limb here. So be conservative. It's at least 1.55. Worst case scenario. Personally, I think 1.6 is an absolute minimum unless everything that can go wrong does go wrong. So once again, I'm on the record as I predicted these guys would raise their price target. They're also going to be raising their delivery estimates. By the third or fourth quarter of 2022, Morgan Stanley's full year delivery estimates for Tesla will be at least 1.6 million units. You can count on it. I don't understand how these folks are so far off the mark, honestly. Our 2030 volume estimate rises to 8.6 million units versus 8.1 million previously. I've also roasted this estimate, fuck me. I mean, honestly guys, seriously, do some fucking math here. Let me cover the eventual volumes that Tesla's currently existing factories will reach. Fremont, 1 million. Shanghai, well over 1 million. Berlin, well over 2 million. Austin, well over 3 million. Holy shit, we're at 8 million units already. Do you really think Tesla's not going to make any more factories other than those already operating or under construction over the next decade? Unfucking likely. The knock-on impact to profitability takes our 2025 auto EBITDA forecast to just over 40 billion versus less than 38 billion previously. By 2025, we forecast Tesla global EBITDA to be greater than the global EBITDA of GM and Ford combined. A shockingly aggressive estimate there. Not. Our long-term exit EBITDA margin assumption in our Tesla DCF of 20.5 excludes credits. Discounted cash flow, sum of the parts valuation. We raise our target to $1,300 on the back of higher top line and earnings assumptions, which drive modestly higher valuations from the adjacent businesses in our sum of the parts model, network services, etc. Less than half of our $1,300 target is accounted for by our core auto valuation of $618 per share. No change to our $1,600 bull case or $500 bear case at this time, which is a little bit curious. New information, it's more bullish. You would assume that a rising tide lifts all boats, but hey, is what it is. While Tesla is not our top EV pick... oh, my life, I can't do this. While Tesla is not our top EV pick, I'd love to know what is. Maybe Nikola stock? It's arguably our most important stock pick. Not owning Tesla means not owning the one company that could make all other EV names obsolete. This is a fair point. Look for Berlin, Austin, Gigapress, Structural Pack, many new model intros and other developments to enter the narrative in 2022. At this stage, we believe Tesla is clearly in the financial, human and cultural and technological position to drive industrialization across vehicle manufacturing, battery technology, supply chain, EV infrastructure, and other important aspects of the ecosystem, recurring revenue platform, autonomy, etc. These are all fair points. While 2022 may be an exciting year of milestones on the path to EV standard setting, investors should have a heightened sense of the risks associated. These risks include capital deployment into battery and EV technology that may have compromised terminal value due to obsolescence risk. The market seems to believe that the shift to EVs will create more winners than losers, and that EVs are a net positive for legacy auto firms. They are making a fair point. The bell curve is real. Shout out to the valuations of Ford, General Motors, Lucid, Rivian. I could keep going on. We wonder when the market will no longer be suffering from brain damage. Wait, I think I said that wrong here. We wonder when the market will begin to price higher EV adoption as a net negative for auto stocks, i.e. not a positive. Good question, Morgan Stanley. Now I just want to share a really quick clip of a finance media anchor discussing how obsessed her kids are with Tesla.
Everything new is trending. So we look at Tesla, we look at Ford, and a lot of the new things that they're doing, electric everything, that's where we're headed. So while that seems discretionary, I think it's going to make some consumers feel like that's mandatory. It's not, it's just like toilet paper.
Right. I understand. I was saying earlier that I had the teenagers with me this weekend, and they were so enthusiastic about the Tesla, and they're not enthusiastic about anything.
This is a really telling comment from Nicole. Now, most folks watching this channel who are regular viewers will know kids, young kids, obsessed with Tesla. They know it's the future. There's Teslas and there's everything else. You see kids around a Tesla, they lose their fucking mind. But Nicole makes a very interesting point here about her teenagers. Very keen observation that they were extremely enthusiastic about the Tesla, aka the car, and pointing out that they're generally not enthusiastic about anything else. If you've got teenagers, let me know in the comments below. I'm sure you can understand where she's coming from here. Remember, it's kids and teenagers today who in the future will be customers of Tesla, either buying the vehicles and or solar and or home batteries, or using their robo-taxi service once autonomy is solved. I think you'd be hard pressed to find a single other brand, any company on earth whose products and technology kids and teenagers are so universally obsessed with. And now, as promised, even more Tesla stock price target increases from the Wall Street analysts. And by the way, there'll be plenty more to come before Tesla's earnings late this month, so stay tuned for those.
Pay attention to what's going on with Tesla. And it was at the end of last year that Dan Ives actually pointed out that there's going to be a $5 trillion EV auto marketplace, and that Ives says Tesla's going to get half of that, $2.5 trillion, and raise the price target on Tesla to $1,400, in a bull case scenario, $1,800.
By the way, if you haven't already seen it, Dave Lee recently spoke to Dan Ives. Great interview. It's excellent to hear Ives' thoughts outside of the soundbite environment of the finance media.
Don't take it from me. Let's go to Inez Ferrer. She's got much more on what's driving Tesla stock higher.
Yeah, that's right. Well, Dan Ives definitely is the bull of the bulls when it comes to Tesla. And there are, in fact, $22 buys on the stock, 9 holds, and 1 sell. But I will tell you that Mark Delaney is another bull, and he's from Goldman Sachs, and he picked Tesla as the top pick for 2022 with a price target of $1,200, increasing his price target to $1,200 on Tesla, which would be about a 16% upside from where you're looking at the price today.
Now, don't get me wrong here, a price target increase and a price target that's above where Tesla stock already is, it's decent, it's a start, but it's also embarrassing. This just goes to show the size of the balls of old man Sachs. In fact, here's a picture of their nuts on screen right now. I struggle to understand why the Wall Street stock analysts haven't yet learned their lesson. Every step of the way, Wall Street consensus estimates massively under where Tesla actually comes in for earnings, deliveries, production growth, margins, you name it. Yet still, lesson not learned. Same is true of their price targets. The average price target on Tesla stock from Wall Street has basically been chasing the stock price the last 10x. I don't know if you guys and girls know, but the job of a Wall Street analyst in terms of a price target is to accurately estimate where they think the stock price will be in 12 months' time. Instead, the average Wall Street analyst has been chasing after Tesla stock. You have somebody with a $200 price target and the Tesla's at $400, and they go, oh, I better increase my price target to $375. Then it goes to $600, then $800, and they go, oh, I better increase it again, and just keep going and going and going. Case in point, this $1,200 price target. Based on Tesla's blowout Q4, increasing margins, blah, 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 it's quite obvious that Tesla's going to blow away expectations not only in Q4, but throughout 2022. Tesla's earnings will be at least 30, 40, 50% above the estimate from Wall Street at this point in time. Yet Goldman Sachs have increased their price target a whopping 6 or 7%. Not only that, but this $1,200 price target is less than Tesla's 12-month high. This is so conservative. It makes no sense, and I just don't get it. I just really wish the Wall Street analysts would A, use their brains, because they've got them, they just don't seem to be using them, and B, more importantly, use their balls.
And basically, he's saying that this has to do with Tesla being in the best position really to capitalize on the shift to electric vehicles. And just to give you an idea, by the end of last year in China, the market share for new sales of vehicles for electric vehicles was 20%. In Europe, the adoption is now at 10%. And here in the US, it's at 3%. Now that is small, but you have new players on the ground. You've got Rivian, you've got the legacy automakers that all have their strategies and vehicles that they are rolling out. And also Delaney pointing out the just very robust fourth quarter deliveries for Tesla. Just to give you a refresher for that last quarter, Tesla delivering over 308,000 vehicles in 2021. It saw a rise of 87% rise in deliveries to 936,000, more than 936,000. And so this analyst is saying this is a sign that Tesla will continue to sell more cars in 2022 and in 2023 and really be able to take advantage of that EV adoption. And also saying that it's expecting Tesla to increase its margins, taking a look at the ramp up in the Model Y, also citing the Berlin Gigafactory, the Texas factory, and also increasing software revenue in the years to come.
And as Tesla has also just received another preliminary approval in Berlin, this time to build Model Y bodies at that facility. What are the details there?
Right. So Tesla already has a preliminary approval to build 250 vehicles, Model Y bodies. This will be for another 2,000 Model Y bodies. And Tesla has had some bottlenecks in Berlin when it comes to environmental regulators. And there was a commentary that a period that was extended for the public to comment. And as it's awaiting final approval, it has received this preliminary to build more of these Model Y bodies. Now, these are for testing only, so it's not for selling these vehicles, but it's for testing. So it's first got those 250, now it's got these 2,000, and there will be 500 per week. So it's presumed that in about a month, it will be able to build all of these 2,000. But certainly another step forward as it's awaiting final approval, and that final approval for production could come any day now because the government at the end of December had said that it received all the necessary documentation for them to make a decision on it.
Yay for German bureaucracy. What a fucking joke. And by the way, if you think this is just restricted to the building of new automotive plants, you've got another thing coming. This bureaucracy, this red tape, this ultra-conservative have a meeting about the meeting before you have the meeting type of approach permeates the culture of German automakers too. Once Tesla's finally up and running in Berlin, likes of BMW, Mercedes, Volkswagen, big trouble. It does make one wonder, is it possible some of the German automakers may be doing their best behind the scenes to try and slow Tesla's opening of the Berlin factory? Not making accusations here, but something to consider. Either way, the Berlin factory is on the cusp of opening, and when it does, rip German automakers. Those of you that don't know, it takes VW about 3 times as long to put together a vehicle as it does Tesla. Think about that. And just for the record, for the 10 trillionth time in the last couple of weeks, this will not be the last series of price target increases from Wall Street analysts, nor will it be the last time we hear delivery estimates increase for 2022 and beyond, or earnings estimates increases. Stay tuned. Remember, generally speaking, if the analyst estimates go up, so too does the price of Tesla stock. Of course, anything can happen. This isn't guaranteed, but that's the general trend. That being said, here's a prediction that I'd like on the record. The Wall Street consensus estimates will be chasing Tesla's earnings and deliveries for the entire year. In fact, for the entire decade, let's be honest. So if you want to get ahead of the curve, perhaps the bell curve, check out my price targets available exclusively on Patreon. Click the card in the corner or the link in the pinned comment to join. Because here's my guarantee, yes I said it, guarantee to you. My price target estimates in my base case for Tesla stock will be more accurate than the Wall Street consensus estimates in 2022, 23, 24, 25, 26, 27, 28, 29, and 30. And you want to go a step further? Access my Tesla valuation model at the investor support level and above, also exclusively on Patreon. My earnings estimates for Tesla going out over the next decade will also be closer to the market than the Wall Street consensus estimates for the entire 10-year period. Do I have a guarantee? No. Do I have a crystal ball? No. Do I have a time machine? No. But am I going to be right? Yes. And if I'm wrong, you guys and girls can surely keep me accountable. In other words, I have such a high level of confidence and conviction that I will understand Tesla better than the average Wall Street analyst over the next 10-year period that I'm putting it on the record and staking my reputation on exactly that. In fact, if the day ever comes that the average Wall Street analyst understands Tesla better than I do, I think I'll have to find something else to do with my time. See you guys in the next video. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel, and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.